welcome to the site investingcube.com. If you're watching this via YouTube, then you're probably watching it via the ATFX YouTube channel. You're most welcome to join us here on investingcube.com, which is a site that I created and manage, where we have a few very experienced writers talking about the markets and sharing their views and news, trying to then take something abstract and turn it into something actionable, and hopefully help you guys trade better. So don't forget to check out the site. You can effectively access most of the content now. So check it out. And what is locked? You just need to become a free member and you'll access everything. And things like our quarterly market report. And we also have a few other restricted articles like shares outlooks and so on and so on. But now let's take a look at the markets. Now, if you're watching this live, like Stefan here on the chat box, you're most welcome to say hello. That's always great. It's good to hear from you guys. It's important to have that interaction because that helps, puts me in a good mood. It helps me do the presentation. And obviously, if there's a lot of people watching, the more I want to do. So if you do like the presentation, don't forget to share. Stefan says, hope everything is going well in London. Yep, things are good. It's a bit cold, but it's quite nice. As long as you have a good jacket, you'll be all right. And soon, I guess all the Christmas lights are going to be out on the streets and stuff, so makes it quite fun. Okay, let's take a look at the markets. But before we start, before I forget, if you haven't registered already, I just sent you a link here for the online summit. It's not usually that I work on weekends, so do anything on weekends except chilling and spending time with my family. But I decided to launch the site to some extent by providing this free online event where I invited a few speakers. There's 6 of us that are going to speak, and it's an ongoing webinar on Saturday from 10 a.m. in the morning London time until about 3 p.m. And some of these gentlemen will explain how they've been trading and their view on the markets, and they're all a bit of celebrities in the industry. You can read more about it via the link I sent to you. You got a bit of info about what the guys are all about, and then you have a bit of introduction here to see what the talks are going to be. So check it out. Book that weekend off, that Saturday off to join us. Who knows? Maybe you're going to be able to pick up a few tips and tricks that can help you to become even a better trader. What we're going to do now, though, is going to take a look at the markets. We're going to begin with the euro. The euro is going lower, which is what I've been projecting. So you can see here that market-wise, from the high to the low, you had a 50% correction. And my general idea has been, since we were trading down here, that the market probably is going to go up and then reverse from this level. So it's looking good right now. The market is indeed trying to go lower, and slid already here at 8 a.m. It's now trying to have a bit of a comeback, but it's looking healthy. Hopefully this will continue, and hopefully over the next few days, sorry for flipping so much with the charts. Let me just delete some stuff there. There we go. Hopefully this will go slightly lower, maybe to 110.40, 110.20, and then at that point, that trend defining level is going to be placed just above the high. So effectively, at that point, the effective risk would go from 49 pip to 23.4. A lot of the times, not always, of course, markets are bloody choppy. The market volatility are at 1985-year lows. That's like 35-year lows. That's how low volatility is. So it is very difficult to make money nowadays with traditional trend following systems. You do need to adapt a bit. But the key point is is that when things go good, for example, with the break here, and most of the time it is like this, where I start out with a wide stop loss like this one, which reward ratio is 1.54. However, most of the time, if I get it right, I'll be able to reduce my trend defining or my stop level, so it comes down a bit. And if I just keep the position towards the target, which I don't always use, I do get out a little bit earlier, then the risk reward ratio, which was initially 1.58, like in this situation, suddenly becomes 3.3. And even if I don't get out exactly at exit, put it down here, and you guys have a 2.46. So you see here how there is an interesting moral of the story here, which is that you don't have to have an amazingly good risk reward ratio from the very beginning, because when you follow the trend, unless the trend blows up in your face because you misjudge the trend, which will happen at the end of every move, if you manage it correctly and you're able to reduce the stop loss in most cases, then you usually get a good risk reward ratio. To give you an idea, we turned bullish from here, and the market went up and then down and up and down, but we continue to be bullish, right? And we managed this whole move to the upside. And then when we go down here, I wanted to buy that, did not work out. And then I think we even tried to sell at one point. That did not work out, and then we got it going. But if you just make sure you go with the trend, you have your risk reward ratios, then in the longer period of time, you'll see a change to your account. Of course, the market goes so slowly nowadays, so it's very difficult, like time-wise, because everybody wants to have everything like now. Everybody wants everything immediately, and people and investors, everybody wants things now. The thing is this though, sometimes the market doesn't give you what you want now. So here, for example, we did have that little push to the upside, and then always when the trend flips and turns around, you lose some money, sometimes on being long and sometimes in the beginning of being short. So for this period, I mean, I didn't calculate everything on all the setups I shared with you guys here, but I reckon by the time we go down here again, at least the trading from here would have been again in the positive, but it would have taken a full 2 months to generate something that normally would go much quicker when you have active markets. Then again though, what's the alternative? Put your money with the bank? Not really good option, is it? Here's another one, British pound. A few days ago the market slid below here. I said let's turn bearish, didn't work out, went down, went all the way up. Looking at this today, there's not too much to add or say. The market is trading sideways between the October high and the low of 127.64, 62, sorry. I think if we take out the high, things turn a bit bullish. I'm not sure by how much, but we could treat this like some sort of rectangle. So maybe go a little bit higher here on the break to the October high. Until that happens, it's probably going to trade sideways for longer. Dollar yen. We're moving back towards that little buy spot that I've been mentioning. I'm going to push this up a tiny bit. The dollar is doing okay. You know, it's strengthening. Stock markets, though, a bit bearish. Like the German DAX is down quite a lot today. It's actually threatening its uptrend. So that might weigh on dollar yen. But for now, the trend remains bullish above the November low. I know I've been bullish here. I think it was up here. Did not work out. Usually what I do is when a market does not work out, I don't trade it for a bit. And I just do analysis on it. And when I feel that I'm starting to get into the rhythm of the market, I put my money on it. But I still do the analysis. Crude oil prices did not work out, unfortunately. The idea was to buy here. Here in the beginning of the month, we said, you know, buy down here. That worked out fine. We said, look to buy here. That would also out fine. And then when the market moved upwards here, after trading sideways for a few days, it made sense to turn bullish again. But the market slid down to the buy area. We did receive a bit of support, but here we would have lost out if we would have traded on that setup. Looking at this today, the market is going down. We're even breaching that little trend line, but I reckon that from down here, I'd rather put my money with the bullish traders than with the bearish traders. So I'm going to continue. I'm going to insist on being bullish here. And you're looking at here, if we move up to the top again, the risk reward ratio of 3.41. Gold prices, so they've been pushing up against the sell zone, a bit like the Euro USD. But we're here. There's no real change. The market did try to push a little bit higher today, but there's no change to the outlook. As long as you're below the November 7th high. This will be in a downtrend. Of course, if you zoom out and look at the bigger picture, the outlook looks a bit different. You have some sort of a channel that we're working with, and from that perspective, the channel perspective, this might not be most ideal setup to work with. Um, Maybe we should be selling up here at 1500 with stops at 1517 and then targeting the lows, like here or here. Maybe yes, maybe no. This is a bit difficult, but the outlook here for me in the short term will remain unchanged for now. Because usually when you had that slide, you had that acceleration, right? And that worked out well initially. We broke here, went almost down to target, and then the market went back up again. And now the market is a bit more sluggish than I would have liked to, which again sort of hints that maybe it wants to reverse from higher levels, but we don't know that, and that's the problem with trading. We don't know, and we shouldn't have high expectations on any single individual trade. There's a reason why people tell you risk 1%, 0.5%. Why? Because these guys, they know they've been trading and eventually get around to write a book. Even I was offered to write a book, by the way, so it's not that difficult to write a book nowadays. A few years ago I was offered to write a book, but I turned that down. Key point this though is that I usually stick to 1.5% risk, max risk, sometimes 0.5%, because I know that in the short term I have no control over the market, but I'm happy to trade, and by the end of the year I'll see what I produced. Have different income streams to sort of make sure that if the market turns a bit boring, there's been this year, that I don't have any issues. And that's, everybody should do that. If you look at books about millionaires, they usually have 6 income streams. So this fully fine. There's a glorified view in the industry of retail traders that you're supposed to be in a beach just trading and just enjoying life. Beach life is fun for like a week or two, then it just gets boring. I prefer the big cities, but having just one source of income is usually not a good idea. Long story short, just make sure you don't have too much risk per trade, okay? Because you never know what's happening around the corner. Finally here, actually, when we're talking about it, let's share a bit of more wisdom. If you say, well, Alex, I have a small account, I'm going to risk 0.5%. It's going to be $50 or $100. I don't want to risk that little money. Well, there are platforms around there that if you do trade good for a certain period of months, they will actually fund you with money. So that's one option you can consider. The other thing you can consider is just to trade well for maybe 2 years. And in most places in the world, if you can show that you can trade well for 2 years, people will come to you and make investments with you. But it's important you cross that 2-year boundary, if not more, but usually 2 years, because anybody can do miracles in the short term. By trying to keep that up for longer periods of time, well, I can tell you that is difficult. To give you an idea, 2017 I made about 120% return. 2018 I made 39, almost 40% return. This year I'm down with 22. So you see, historical results doesn't necessarily mean that you're gonna have a great next year. But I do know, given my experience and being profitable since 2014, that as soon as these markets starts to move a bit more, I'm gonna be cashing in, and probably in a year or so, hopefully do what I would have done this year, and I'll probably do that in a period of a few months. So that's why keep risks low. And then again, the other thing, as I said before, if you don't feel that, well, it's worthwhile your time, look at it from the long run. And anybody with a 2K account can usually add a bit more money to their account eventually. It's just that you need to be committed with saving into that account. If we go back to the analysis, this is the Nasdaq 100, and the trend is bullish about 81.71. You're starting to see a bit of sort of higher volatility in the markets, people starting to wake up to that this is maybe too good to be true. And in the S&P 500 as well, you had a bit of a bearish push here, but the trend remains bullish here in the S&P 500 above 3,065, and as long as you trade above that level, I think people might look to buy between 3,098 and 3,065. Looking though at the German DAX, you might remember this market traded sideways for a long time, and I said maybe with that break to the upside, they will try to catch up with the US markets. The idea was quite straightforward. Let the candle close, then let's buy back on a dip. You can see that the market just slid straight through here. And this trend now is actually short-term bearish now. When the market slid below that level, the market, sorry about that, the market is now not bullish anymore. There's not too much we can do about that. It's just acknowledging the fact that that's not going to work out. Looking at this right now, I think you're dealing with maybe some sort of, this is not obviously 100% correct, but I think you took out that low, and this, unless this market before the end of the day manages to boost a nice reversal candle, the high here is going to be blocking price, and this could easily be the beginning of a few days of decline. If we take fib from the whole move since August, then we can revisit that breakup point. If we take Fibonacci from this move here, then you have a bit of an overlap here, so that 12,600 level is an interesting level, and then you have as well this little spot here. So this is where I would contemplate a new bullish position somewhere down here. That would be good, I think. Again, if the market flips and turns really bullish, which it could do because US stock market is still bullish, then that could be something. If not, I think if it closes here, this candle over the next hour or so, it might swing back up again, but then slowly trickle lower. There are other markets that have started to turn lower, like the Italian 40 is one of these. This is something I watched. I have a set of premium members and clients where I shared that this breakout in October, and you can see how it had a very nice bullish move. I remember very well here on November 12th, the Italian stock market was going higher. This one did not tag along. We have as well the OMX 30, which is the Swedish stock market. Let's see how that one is doing today. Here had a very strong rally and again started to roll over. So at least in Europe, you're starting to see some of these markets to roll over. And in the S&P 500, you had also a little bit of a reversal. So something is happening. You're definitely seeing profit taking. In the case of US stock markets, see what happens today if they go down to the buy area. If you see that the acceleration in European stock markets is going down, you don't really want to be the first guy buying on that dip into that little spot. And if stock markets indeed go lower, then that could easily influence something like the dollar yen. Okay, let's see if you guys have any questions. So we got Maine West, good cold mornings. That's what he's saying. And we have Karamarat as well saying good morning. So you got a question, what do I think about dollar CAD? Looks like we might look to top soon. So dollar CAD, I have an analysis. I do analysis for all markets. I don't necessarily trade them, and this is one of these. So you are within that range between 130.21 and 133.50. All right, and the market is pushing up now. And usually when the market sort of decides that it wants to trade bullish, it will trade bullish for slightly longer. I think as well Aussie CAD and a few other CAD pair like CAD Yen is seeing the Canadian dollar breaking down. When I see one currency breaking down against many different currencies, and I see that as the beginning move, I've become very, very cautious. So I will be very slightly careful here. I think this can continue to rally throughout the day. And then if you really want to, I guess you could try out to short a slightly higher levels. I reckon maybe 33.20 or something like that. Tight stop loss above, and then look for this going back to the midpoint here. But risk reward ratio will be like 4.2 43. But the reason for the risk reward ratio being so good mainly has to do with the fact that there's a very high risk that this is just gonna get stopped out. But for now, it's trading sideways. But look at this. Actually, it was not this one. It's a EuroCAD, I think. So you see, this is EuroCAD. This is some old analysis I did some time ago. We're very close to that level. Take that level out, and we're probably gonna go upwards, which gives me a bit of a hint that maybe this is some weird price action. There we go. Gives me a bit of a hint that maybe this is actually trying to bottom out here. I wouldn't call this a head and shoulders, but it's a funny, actually it could be called, no, in that case it has a double head. But let's try another price feed. Some of these brokers, what they do is that they offer price feed, or some of these price feeds here, they are literally, they show you price from Sunday and some weird pricing that just makes it a bit weird looking. I guess we can call this a double head. Double right shoulders is fully normal. I don't really experience too much double heads, to be honest. Some of these things as well, you need to take them with a pinch of salt. You definitely can say as well that you have a bit of a, this is support here. And if we take out this level, probably go up a bit, and then down, and then up. And you have other stuff as well, like CAD-yen, I think it was. It's CAD-yen. This is some old stuff I've done as well. This one is sliding to a new monthly low, but it's not necessarily the beginning of something actually. But will it go lower? Sure looks like it. Okay, I think we're gonna wrap things up. Guys, thanks so much for watching, and guys, thanks so much for joining me here in the morning. You're great. Don't forget to click on the link, and don't forget to like the video. I'll see you guys tomorrow same time, and don't forget to subscribe to the Online Trading Summit. You have the link here in the chat box. If you can't see it, just go to Learn to Trade Trading Summit 2019. Have a great day, guys, and I'll see you guys soon. Thank you, and bye-bye.